Now, consumers should brace themselves for fuel price hikes next month. Government's brief intervention is coming to an end this month, and the fuel levy has been reduced by R1.50 for the past 2 months due to those higher oil prices. Now, the price surge is being fueled by the war in Ukraine, which is far from over, it would seem. Farmers especially will be hit hard, as you've just heard in the previous bite. And for more on this, we're joined by agricultural economist Paul Makube. Thank you very much for your time this morning. So without that intervention, as I've just mentioned, by government, times are about to get tough, not only for consumers, but for producers, like agricultural producers as well.
Yes, good morning, and thanks for having me. Yes, definitely the impact will be actually huge. We got a 2-month reprieve, which is ending at the end of this month. And indications are that if there's no other interventions, we're likely to see about just over 3 rand a litre increase in petrol. So this comes at a time when we are in the increased activity on the agricultural calendar, with winter crops being planted, and also the harvest season being in full swing for the summer grain crops and oilseeds, but also the exports of commodities such as your citrus, which is actually at the infancy of their export season.
No, absolutely. And of course, all these high input costs that you've just mentioned and the challenges that are faced by these agricultural producers ultimately has an impact on the final product that is produced. And unfortunately, some of those costs have to land on the consumer.
Yeah, definitely. It's inevitable that eventually this will be passed on to the consumer. The cost pressures have been mounting from seed to to fertilizer. As you're aware, you've mentioned the war in Ukraine. It has affected the fertilizer complex, but also not that, but also your crude oil prices that have increased means that all the derivatives of fertilizer, such as of crude oil, such as fertilizer, herbicides and pesticides have increased. And therefore, which means increased costs on the farmers. Although prices are holding relatively well for the farmers, but the rate at which input costs have increased far outweighs what the farmers are able to get in terms of the increase in price of the commodities. So therefore, from logistics to packaging and everything is going high. So therefore, at some stage, the ability to absorb things out, and eventually this has to land on the consumer.
And it doesn't help, Mr. Paul Makube, that we are going to be seeing a South African Reserve Bank following its interest rate hiking cycle that it indicated at the beginning of this year. This is going to be putting further pressure.
Yeah, definitely. The debt servicing costs for farmers are expected to actually increase immediately. Obviously, that squeezes that the margins that were already tight for the farmers. But the fact that farmers have limited ability actually to pass on costs. Actually, most of the passing on happens up the value chain, and there's a limited ability for most farmers actually to benefit from that. So we hope that the situation might dissipate in the next season. So to provide farmers with a breather, because you need that second round of ability for farmers to actually increase the production. Higher prices actually incentivize farmers to plant more. Had it not been that we had a bumper crop last year and this year, we would be talking something else now with regard to food inflation. It would be in double-digit levels.
No, absolutely. Have you found that increasingly farmers are having to rely on debt to be able to operate, or are you finding that the trend is that they are remaining above water given the circumstances that we are seeing?
If you recall, we had a devastating drought that actually put farmers in high debt situation. And the 2 years that ensued allowed some breeze for farmers to actually come afloat. So with high input costs at the moment, and actually excessive rains that actually impacted on some farmers, the margins are are relatively tight, and they will have to rely on that to actually get it into the next season. Obviously, there are those that are in a better position, but they generally they were in a position where they were starting to actually get above the water in the past 2 years due to the good prices and also the bumper harvest that we saw in the last 2 seasons.
Thank you very much for your time, Paul Makube there, who's an agricultural economist, joining us to talk about the plight of the industry and really just the implications that the COVID-19 pandemic, the war in Ukraine, as well as our economic downturn has had on that particular industry.